So we are doing May-June 2021, paper 12. Question number 27. A businessman manufactures 3 products, product X, Y, and Z. Following information is available. Selling price minus variable cost gives you contribution. Contribution minus fixed cost gives you profit. Okay. Direct labor is in short supply. That means this is the limiting factor. All direct labor is being paid the same hourly rate. Okay. They are paid the same hourly rate. Which order of production should be used to maximize the profit? So what you have to do, you have to find out contribution per direct labor hour. So we found out contribution per direct labor hour. The product which gives us highest contribution per limiting factor will be manufactured first. So which order of production should be used to maximize profit? First we will manufacture Y, then X, and then Z. So option C. Let's do the 24th one. The following information is provided by 1 unit of a product. I have selling price, I have contribution, I have profit. Selling price is expected to increase by $10. So selling price will become 110. Variable cost is 60. Cost remains so unchanged. So variable cost will be 60. What will be the contribution? Contribution will be 50. This was old, this is new. What will be the change in the contribution to sales ratio? Find the old contribution to sales ratio. Find the new contribution to sales ratio. Old contribution to sales ratio will be 40 divided by 100. Okay, it will be 40%. New contribution to sales ratio will be 50 divided by 110.
110.
Into 100. So new contribution to sales ratio is 45.45%. So what is the change in the contribution to sales ratio? It is 5.45% increase. Are we clear with this?
Okay.
Now we are doing the 17th one, May-June 2021, paper 12. What is the amount of dividend that is shown in the financial statement for the year ended 30th June 2020? 2019 dividend is proposed in 2019. It will be paid in 2020. Are you with me?
Yep.
Okay. And what is proposed in 2020, it will be paid in 2021. But it will be the expense of 2020 because you are proposing it when?
In 2020.
Okay. Now let's see.
But we paid in 2021.
Wait. During the year, the company paid last year's proposed dividend in full. During this year, the company paid last year's proposed dividend in full. That means it paid 12,000 in full, together with an interim dividend of 4,300. What is the amount of dividend shown in the statement of financial position for the year ended? Statements shown in the financial statements. for the year ended 30th June 2020. Now listen to me. What goes in statement of changes in equity is the dividend that you have paid. Yes or no?
Yeah.
Okay. How much dividend have you paid?
16,300.
Okay, 16,300. So it could be either option A or it could be option C.
C.
This answer is wrong, right?
The real one, no, which they have given in the MS.
Yeah, the one that they've given in the MS is wrong. No, it's correct. In the income statement, there will be nothing. And in the statement of financial position, actually the dividend that we propose, does not become a liability in the current year. That means in 2020. In 2020, it is just shown as a notes to account.
Hmm.
Okay. So in statement of financial position, nothing will come. In statement of changes in equity, 16,300 will come. And in income statement, there will be nothing. There will be a P&L appropriation for limited companies, where your where like in partnership account, whatever transactions are there between the partners and the company is done in P&L appropriation account. Similarly, in limited companies, whatever happens between the shareholders and the company comes in the appropriation account. So in income statement, it will be nil. This is something new to remember. Very nice question. Now the 16th one. At the
So
start
yeah,
of the, what was the total equity at the end of the year? Total equity means shareholders' funds, okay?
yeah.
Ordinary shares were 200,000, retained earnings was 120,000. Non-current assets revalued upwards, that means there is a revaluation reserve. How much is the
Oh,
revaluation reserve? 70,000.
that was
Interim
the
dividend was paid, so it will be minus from retained earnings. This has nothing. Profit for the year was 80,000, so this will be added to retained earnings.
Miss. We also had debentures 10,000, I guess.
No, why? This is debentures is not equity. So 200,000 for ordinary share capital, retained earnings 180 take away 350, 170,000, and revaluation reserves another 70,000. So total value of equity will be 200,000 plus 170,000 plus 70,000. The total value of equity will be 440,000.
What about the profit and all?
I added now.
Uh, so 200,000 was there. So 120 में से 30 went. 30 went with interim dividend. Then added profit. You got 170, then 70. Oh. Nothing about the debentures.
30. What was the balance on E's capital account after admission of Z? Okay. Z admission हुआ है. I want E's capital account. Fine, no problem. We and E are in partnership. They share profits and losses equally. Their credit balances was E is 40,000, B was 80,000. Z was admitted on that date. He brought non-current terms. That date, the following items were taken into account. Non-current assets were revalued downwards. That means this is loss on revaluation, right?
Yep. Debit
Loss
side.
on revaluation will be distributed amongst the partners in the old ratio.
10,000.
10,000 will go to E. Goodwill was valued at 80,000 but will not remain in the books. So I will raise the goodwill over here and I will write off the goodwill over here. Raise old partners old ratio, right?
Yeah, 40. Here
And
it will
write
be
off
4,
All partners new ratio. So it will be 30% of 80,000.
Yes.
80,000 into 30%. So 24,000. What is the balance after Z admission? So 80,000 here, 80,000 here, minus 34,000.
64.
46,000. B. What is it?
ओ मिल गया. मैंने क्या किया था, मैंने 60,000 डेबिट.
So it is May June 21 and it is paper 13. Now listen to Bhaiya. Non-current assets, current assets, total assets. Here you have owner's funds, non-current liability, current liability. Okay. Total liabilities. Now your total assets is always equal to your total liabilities, yes or no?
Yeah.
So non-current assets plus current assets is equal to owner's equity plus non-current liability plus current liability. Are you with me?
Yep.
Okay. Current assets is current liabilities I will get over here. Minus current liabilities is equal to owner's equity plus non-current liabilities minus non-current assets. Are you with me?
Yeah.
This is working capital. Current assets minus current liabilities is what? Working capital. What is owner's equity?
170.
170,000. What is non-current liability? From this
Non
40,000, how much you're going to pay?
120 also.
No. Bank loan is repayable. You're going to pay 40,000 is entire non-current liability. Okay? And this bank loan from 150,000, how much you're going to pay back?
I'm going to pay 30 in the current year, no?
30,000. So what is non-current liability?
120.
120,000. What is non-current assets? 200,000. Are you
Yeah.
with me? So working capital is 170,000, 170,000 plus 40,000 plus 120,000 minus 200,000. So 130,000 is your working capital. Okay.